How does Beijing and their leader in Beijing, how does he look within, giving the grim data of the day?
Actually, President Xi has made a major campaign of his to start looking inward. It's called the dual circulation strategy, where he wants to have the domestic economy become the primary focus for China and the source of growth going forward. Unfortunately, so much has collapsed within China that the domestic economy is nowhere to be found, especially in the private sector, where the only store of wealth the middle class had, the property sector, has completely collapsed. We've had about a year of declining real estate prices. So right now, the rest of the world is the only hope for China, and even that's collapsed because the latest data show the export numbers are nowhere to be found. So China really has nothing to hang on to going into the Party Congress.
How does Xi, Bill Lee, prosecute decisions, logistics, the process of it to Shanghai or to Chengdu? How does Beijing actually get the message out?
You know, right now there's a tension between the central government and the municipal governments. Because right now, the only place for revival is to have the municipal governments go in there and do infrastructure building and just start pumping out fiscal policy. Unfortunately, every municipality out there is so indebted they can't do it. And so the only thing that Xi Jinping has to have to save face going into the Party Congress in October is to have some prayer of saying we will have a revival in the second half of the year. These numbers today have put that to rest, and there's no chance for that. On top of that, Speaker Pelosi has slapped him in the face, and the loss of face going into the Party Congress is going to be something that's going to be very hard for him to recover from.
Bill, we'll get to Taiwan in a moment. Just on the economy, are you describing a balance sheet recession in China?
A balance sheet recession for sure in the private sector, because the only source of saving for the households has been real estate and a very volatile stock market. And so with the collapse of the real estate market and the huge youth unemployment, it's very hard for households to have a positive outlook for the future and start buying things like consumer durables and other items. So the balance sheet recession notion is very much in play in China.
That leaves monetary policy impotent, doesn't it? And Bill, if that's the case, I'm just trying to work out where that leaves the global economy off the back of these dynamics starting to bubble to the surface just a little bit more.
The only place monetary policy can have a play here would be regulatory policy, to somehow ignore all of the holes that are in the real estate sector and say, okay, guys, go on and build. We're going to backstop all of your bad debt and all of those empty apartments of yours. That's the only place for monetary policy right now, is the regulatory side. And China's not going to be able to do that because the regulatory sector, the real estate sector is in such bad shape.
So what are we looking at, Bill, in terms of GDP growth for China?
I hear two handles going into the rest of the year. And so in order for China to get to its 5.5% target, it has to have 7 and 8% for the rest of the year. And right now, it's exactly going the opposite direction.
Has the rest of the world economy factored that in, the likelihood in your idea that you could see a two-handle for Chinese GDP growth?
I think that notion has gotten out, especially among my friends who are China chief economists out there. They can't publish it because they'd be banned from China. But I think the notion is among the investors of the world, well, this may be temporary and that China will somehow recover because it always has. But the structural problems I just pointed out are just so severe. I think there's going to be a lot more work to be done for China to regain anywhere near its investor status.
What about the asset pricing, though, globally? And we're just talking about the Empire Manufacturing Survey, severely disappointed. Second biggest drop in this history of this index, the second biggest just all-in level that we have ever seen in this index's history. How much are we looking at a global recession really pitting off the slowdown in China?
Well, manufacturing is really at the core of the globalization. That's the one sector that's most affected by globalization, and China in particular, because it's been the nexus of manufacturing. So we would expect any kind of slowdown in China that affects the global supply chain to kill the manufacturing sector before anything else, and we are seeing that in the data now. So that's not so surprising. What is going to be difficult would be how the rest of the global economy will adapt its global supply chains in a way that it takes China out of the picture, or at least become less important part of the picture.
Bill, you said something moments ago. I'll paraphrase, that certain people can't publish things because they'll be thrown out of the country. Now, Bill, there's an element of truth in that, in the minds of a lot of people. And I wonder if these things start to deteriorate just a little bit more, Bill, where I look for reliable data on what's actually happening in that economy.
Well, I hate to say this, but my sell-side colleagues are kind of constrained. I'm lucky to be at Milken, where I'm not constrained to say what I think. And I think it's going to be very difficult to find hard intelligence about China outside of private sources.